Welcome to a brand new series, Vantage Point, first of its kind investment talk show in Sri Lanka.
Every other Sunday on Radio Sri Lanka.
A review of global and local economic situation, capital markets and selected stocks.
Speaker Chamikara Gunawardena, founder Investor I Private Limited.
Sponsored by Investor I Private Limited. If you are looking for investing through research, don't miss your Vantage Point.
Every other Sunday on Radio Sri Lanka.
Right here on Radio Sri Lanka. Welcome to Vantage Point and welcome to the fifth program in this series with Chamikara Gunawardena, founder of Investor I Private Limited, Sri Lanka's first independent and bilingual investment research provider, creating awareness of investment options and disseminate investment knowledge among the general public. I believe, Mr. Gunawardena, this is the fifth program.
Yes.
And there has been a great response from our listeners to this program from what I can gauge moving about with the general listeners. So that speaks well for your program, Mr. Gunawardena.
Yes, absolutely. Yeah.
Right. If you might remember, we have gone through some of the major issues concerning this subject in the previous weeks, like what must an investor do when investing in shares? What issues would the investor face when following these steps? And with well-researched analysis giving advice to the investor can also go wrong. And also we discussed about how one can choose a genuine stockbroker. And apart from that, what else did we discuss, Mr. Gunawardena?
Yeah, in the previous program, those were the ones. But the programs before those, we discussed about the factors that affected the stock market, and the rumors that are being circulated in the Sri Lanka stock market, and likewise.
Right. Investor I Private Limited is in the forefront in providing research and knowledge to investors, and we are very thankful to Mr. Chamikara Gunawardena for his efforts to choose the national radio to disseminate valuable knowledge to our listeners on this subject. Now, the all-important telephone number to keep in mind is 0112 888 400. That is 0112 888 400. You need to ring this number during office hours and during weekdays for any information and knowledge that you need to get from Mr. Gunawardena and his staff, well-trained staff, on any matter concerning this subject. Now, to get down to basics in today's program, Mr. Gunawardena, tell us, in your previous program, global capital market, you said global capital market developments affect the Sri Lanka stock market as well. Would you be able to give us a kind of a brief analysis of the global capital market performance in 2012?
Yes. As a specialized research organization, we have categorized 28 world's capital markets into 4. Those are developed markets, tiger markets, emerging markets, and frontier markets. Developed markets are the markets of developed economies such as US, Germany, and France. And tiger markets are the markets of countries that have experienced unprecedented growth in 1980s and early 1990s, such as Singapore and Taiwan. And emerging markets are the markets of relatively large economies with rapid growth and industrialization, such as China and India. And frontier markets are the markets of developing economies which may have higher risk of investing compared to emerging markets, to name a few: Pakistan, Vietnam, and even Sri Lanka for that matter. Among around 30 markets we track on a daily basis, only Sri Lanka and Bangladesh stock markets declined in 2012. So frontier markets and emerging markets performed considerably well in the year, with markets such as Venezuela, which recorded unprecedented 302% growth in 2012. So the two markets, Sri Lanka and Bangladesh market, which came down in 2012, were among the frontier markets. So among emerging markets that saw growth in the last year were Philippines with 81% growth, Thailand around 36% growth, India around 25% growth, South Africa around 23% growth, Indonesia about 13%. And among frontier markets, as we said, Venezuela 302% was up, Pakistan around 50%, Kenya around another 40%, Vietnam around another 17%, and Argentina around 16%. So among the developed markets, Germany gained the most with around 29% growth, while Japan around 23%, Australia around 15%, France another about 15%, and Euro area around 14%. And among the tiger markets, Hong Kong around 23%, Singapore around 20%, and Malaysia around 10%. All of these markets made considerable gains during 2012. So policy actions from developed economies in stimulating the economy, such as maintaining low interest rates, monetary easing measures, and international support on debt-ridden Eurozone region, and improvement in global economies during the latter part of 2012 started drawing investor confidence on most of these global capital markets. And if you look at the emerging and frontier markets, those also rallied mostly on country-specific reasons. For example, Venezuelan market enjoyed the highest gains, mainly with inflation and interest rates coming down considerably, as well as the economy expanding during the year, while the markets also started picking up due to the presidential election in October 2012 on the hopes of victory of a more pro-Western presidential candidate. And the Karachi stock market, the Pakistani stock market, also made gains with improved investor confidence as government relations with the US improved significantly and corporates enjoyed strong earnings during the year. And the reduction in policy rates and capital gain tax reforms also acted favorably for the equity market performance in Pakistan. And Kenyan stock market also rose with rising confidence amidst the lower inflation and interest rates and stabilization of the local currency, which lost ground in the previous year. Among the emerging markets, fundamentally strong Philippine stock market enjoyed the highest gains due to better than expected recovery in economy, rise in stock listings, and increased trading hours, which helped generate more trades in the year. Thailand equities also edged up with foreign direct investment increasing, government introducing stimulus measures to boost consumption, and there was a rise in stock listing in the stock market and also introduction of new technologies in the stock market, together with reduction in corporate income taxes during the year of 2012. And when you look at the Indian market, Indian government introduced several policy reforms such as a cut in much demanded fuel subsidy in order to contain the rising fiscal deficit. And there were reforms to encourage foreign direct investments and also reduction in policy rates, which helped in building confidence on capital market investment in that country. South African equity market also edged up with gold prices increasing during the year, which is one of the major export commodities in South Africa, and the boom in retail industry in the middle of a considerable increase in the consumer spending in the country. However, as I said, the Bangladeshi stock market continued to lose ground as investors were still skeptical from the market crash that was witnessed in 2011, while economic factors such as balance of payment crisis, high interest rates, and political instability would likely have caused to dampen the investor confidence in the Bangladesh stock market. Yeah, that's just a wrap up of how the global capital market performed during 2012.
Right, world capital markets, I mean, you were referring to the Philippines, Thailand, and the Indian market. There were highest gains in the Philippines, and Thailand's equity market also did well, and also the Indian market. I mean, compared to some of the other countries, these countries have really done well, is it?
Absolutely. Yeah, for the reasons I mentioned.
Yes, you have already mentioned the reasons. Now, going by what we have discussed about the global capital market, how was comparison, how was the performance in Sri Lankan capital market during last year, 2012, and also the previous 4 years.
Yes. If you look at 2012 year, the local capital market declined around 7% to 5,643 points by the end of 2012. And among the most gained stocks in that year, which helped to contain the reduction in the local capital market, were the Nestle company, which gained almost 82% in share price, and Ceylon Tobacco, which gained around 69%, and Lion Breweries, which gained about 42%, HNB Non-Voting, which gained about 39%, and Balangodu Plantation, which gained about 37%, and so on and so forth. So among the losers, the companies that lost share price during the year were HVA Foods, which lost around lost more than 60%, and Walkers and Craig, which also lost more than 60%, PC House, which also lost more than 60%, and so on and so forth. So even in year 2011, it's not just 2012, even in 2011, market dropped 8.5%. Sri Lanka stock market dropped 8.5%. So despite the overall market losing, the stocks such as Colombo Land and Development, HDFC, Asian Alliance Insurance made substantial gains for the investors who selected and invested in these shares. For example, Colombo Land and Development moved up over 180% to rupees around 55, whereas HDFC moved over 150% to about 1,400 rupees, and Asian Alliance Insurance moved up over 100% to rupees 167. So the best years in the history of Sri Lanka's stock market were year 2009 and 2010. So in year 2010, LB Finance, Thankutu Porcelain, Colonial Motors, Dimo, Lanka Ceylon, and Colombo Fort Land and Buildings saw over 400% price growth among over 50 other stocks that gave over 100% return to the investors within the period, within that year itself, within 2009 or rather 2010. So in year 2009, companies like Colombo Dockyard, John Kills Hotels, Carson Cumberbatch, Renuka Showwalas gave over 300% return to the investors of those companies in a year where over 60 companies showed price growth of over 100%. So it is not just the upside, we need to talk about the downside as well. So during 2012, there were about 15 to 20 stocks, and in 2011 about 10 to 15 stocks, and in 2010 5 to 10 stocks saw their share prices slashing over 50%. So it was only the year 2009 there were any major losses seen in any of the stocks listed in the stock market.
But 2010 was a year of growth. In what
absolutely, that's what I said. In 2009 and 10, both years we saw on our average 100% growth for both years. If you compare those 2 years, so therefore, what as the head of or the pioneer of independent investment research in Sri Lanka and a specialized research firm, what I would recommend is it is important to when you invest in the stock market, it is important to buy the right stock at the right price at the right time. So even if you buy the right stock, fundamentally strong stock at the wrong price, there is still a high probability that you will lose in that investment because you have overpaid for that stock.
So the possibility of losing there.
Yeah, even if you buy fundamentally strong stocks, what I mean is, if you don't buy at the right price, if you buy at a price where the price is overheated, the tendency for the share price to come down is high.
So is there a risk involved in that?
Yeah, if you buy at the wrong price, yes, you could still lose even if you buy.
So you have to go always for the right price.
Absolutely.
At the right time.
Absolutely. So even if you are buying a fundamentally weak stock, If you buy at a lower price, if you buy at an undervalued price, you could still gain because you are buying underpriced, undervalued stock, even if it is fundamentally weak. So you could gain on that stock because the price is severely or heavily undervalued.
Now, how would the investor know about this to buy at the right price at the right time?
Yeah, so that is the role of the analysts in the
yes.
stockbroking firm, the research departments, as well as independent research firms like ours. So we write research reports, we write updates, we provide valuation guides. So the investor should be able to go through those research reports, understand those, and make their investment decision, because in those reports, the firms say what to buy, what not to buy, and whether the prices
I believe
are
you were talking about Invest I Private Limited being in the forefront. I believe it was in last time's program that you provide research and knowledge and that anyone can contact you.
Yes.
And the number to dial is 0112 888 400. 0112 888 400. You can call on this number during weekdays, during office hours, and contact Mr. Gunawardena or his trained staff for any information or guidance, if you may, regarding the subject, and I'm sure they'll be only too happy to help you.
Yes.
This is Vantage Point, program number 5. We are with Mr. Chamikara Gunawardena, founder of Investor I Private Limited, Sri Lanka's first independent and bilingual investment research provider. Right, we are discussing some very important aspects connected with the subject. Mr. Gunawardena, please do tell us, in one of your previous discussions, you said foreign investors play an important role in Sri Lanka's capital market. In your view, how important is foreign investors' opinion on the Sri Lankan stock market?
Yes, Neil. As I said in one of our previous programs, Sri Lanka's capital market is not isolated from rest of the world, largely because our economy has a large external trade activity, and there are foreign portfolio and direct investors in the country. Let's look at some of the statistics relevant to foreign investment in Sri Lanka's stock market. From year 2002, Sri Lanka continuously recorded a net foreign inflow to the stock market. But in 2009, a relatively low net foreign outflow of rupees 789 million was recorded. That was the first year after 2002 that the country stock market saw a net foreign outflow. So what this means is, even during the intense war period, that is 2005 and 2008, foreign investors had confidence in Sri Lanka's economy and stock market. If you look at 2008, there was a net foreign inflow of around 14 billion, and in 2010 there was an outflow of 26 billion, and in 2011 there was an outflow of rupees 19 billion. But in 2012 we saw a huge net foreign inflow of rupees 39 billion. So what the net foreign outflow in 2009, 10 and 11 indicate is that during those periods, foreign investors saw Sri Lanka's stock market getting expensive compared to other regional and global markets, with the massive influx of local investors to the stock market, to Sri Lanka's stock market. So let me explain what is meant by a market becoming expensive. The number one quantitative indicator the foreign investors look at when investing in an overseas stock market is the price earnings multiple for that market. So market price earning multiple is what the investors are willing to pay for the entire earnings of that market. So during most part of 2010 and 11, the market P was in the range of 20 to 30 times, which is a figure that is extremely high, or that was extremely high and unsustainable. Unfortunately, some stockbroking firms predicted this P ratio to go to around 35 times when the market was already overheated, and many innocent and unsuspecting investors believed what some of the brokers said and entered the market at extremely unjustifiable price levels. So when these ordinary investors entered the market at the wrong time, foreign investors who are more educated and who also tend to make intelligent investment decisions with their experience, they started realizing the profits that they gained during these 2 years and started going out of the market, causing significant losses for many of the local small or local retail investors. So from around the end of 2011, market P has started to fall. And according to Bloomberg figures, Bloomberg is one of the world's largest economic and financial information providers. Colombo Stock Exchange's market PE now stands at around 11.4 times. So when this is contrasted with more comparable regional and global markets such as Philippines, Indonesia, Thailand, South Africa, India, Kenya and Vietnam, where the PE multiple is ranging from 14 times to 22 times, our market is currently undervalued easily by over 30%. But there could be country-specific reasons why these markets are presently valued at a premium to Sri Lanka's stock market. And therefore, it is not like comparing apple to apple here. So among comparable markets, only Pakistan and Venezuelan market are trading at more attractive valuations than Sri Lanka stock market. But the political and economic situation in these two countries, which are more uncertain are less. I mean, if you look at the political and economic situation in these two countries, Pakistan and Venezuela, they are less stable than Sri Lanka's political and economic situation. So present undervalued status of Sri Lanka stock market is continuing to attract foreign investors with the market reporting a year-to-date net foreign inflow of over rupees 5 billion. I mean, I need to point out here that it is a strong misconception and it is also wrong to say that Sri Lanka stock market declined in 2011 and 2012 because of weakening economic and corporate fundamentals in the country. What mainly happened during these 2 years were, while most of the global capital markets went up during these 2 years, Sri Lanka stock market got adjusted gradually to more sustainable and realistic levels from highly unsustainable levels that were seen in 2009 and 2010.
Well, that's it on another edition of Vantage Point. Our thanks go out to Mr. Chamikara Gunawardena, founder of InvestEye Private Limited, Sri Lanka's first independent and bilingual investment research provider. Thanks also to Indira Navagamur for producing this program and Ravi for the technicalities. And the number to keep in mind is 0112 888 400. 0112 888 400. We'll see you again in 2 weeks.
Welcome to a brand new series, Vantage Point, first of its kind investment talk show in Sri Lanka. Every other Sunday on Radio Sri Lanka. A review of global and local economic situation, capital markets and selected stocks. Speaker Chamikara Gunawardena, founder InvestEye Private Limited. Sponsored by InvestEye Private Limited. If you are looking for investing through research, don't miss your Vantage Point. Every other Sunday on Radio Sri Lanka. Right here on Radio Sri Lanka.